Hello, everyone. This is Devin Thorpe for the Crowdfund Beat, and I am excited. I've been looking forward all week to the opportunity to talk to this special guest, Alan Schaenfecker of Sharestates. I apologize there, Alan. Welcome to the show. We're glad to have you, Alan.
Thank you very much. I'm glad to be here.
You know, it's remarkable what you're doing. Now, you are operating a crowdfunding site for real estate, but you have found a way to involve ordinary investors even before implementation of the Jobs Act Title III that will legally allow crowdfunding. Tell us a little bit about how you're doing that.
Sure. So the platform actually hosts both private and public projects. We really started this idea wanting to target the general public and give them access to those deals because they haven't had access to it. And anybody these days could go online, they can invest in stocks, bonds, they can buy gold, futures, commodities, whatever it's going to be, but the real estate market's very fragmented and they don't have access to it. So we actually found an exemption in securities law called Regulation A, which at first we didn't realize how difficult it was going to be to use, but we managed to figure it out. And Regulation A lets us actually bring projects to the public regardless of accreditation status. So anybody, regardless of their net worth or what they earn on an annual basis, can actually now invest in real estate projects.
It's really a big deal because not only is the Jobs Act not implemented with respect to Title III crowdfunding, which would allow ordinary investors to participate in an offering like this, but many people believe that the Jobs Act rules are so expensive to comply with that it won't make sense to use them when they are issued in final form. So what you're doing has tremendous implications for the entire crowdfunding landscape. So I want to drill down even further on what's going on. Tell us a little bit about the process of putting forward a compliant Reg A offering.
Sure. So the Reg D process, by contrast, is very simple. There's a couple of online forms filed with the Securities and Exchange Commission through their EDGAR platform, and it's not very time. The time required to do it is very simple. You could do it in a matter of hours. Sometimes it'll take a couple of days. The Reg A offerings, on the other hand, can take north of 9 months. I think the average Reg A offering now takes about 9 months. They go up as high as 18 months, depending on what you're trying to raise for and the structure of the projects. So what we went through with Reg A is actually called the qualification process. It's more along the lines of a registration, almost like an IPO than anything else. So we actually prepare an offering prospectus that's sent to the Securities and Exchange Commission along with the operating agreements and the subscription packages, financial statements, and everything else that would typically be involved there. And it goes through a review process. And once the SEC is done reviewing, they generally send back a set of comments. We address those comments, send back an amended filing, and that process repeats, and it could repeat a number of times. The first Reg A project that we did actually took us a little bit less than 3 months. I think it took us about 11 weeks to get through the SEC. And that's including going through the New York Attorney General's office as well. So one of the drawbacks to using Regulation A is that it doesn't preempt state blue sky laws, which unfortunately puts us in a position of having to register the offering with every state regulator where we want to offer those securities for sale. But we've gotten the science of it down pretty well, and we're confident that we could hopefully shorten that time span even further.
Right now, under the rules, Regulation A rules, there's a $5 million cap on the offering size, right?
Correct.
And what is the typical offering size you've been using up to this point?
Our first Reg A offering, which is actually still live, was for $1.93 million. And that's actually including the cost of the offering, which we've done a pretty good job at minimizing. I can tell you Reg A offerings can sometimes go anywhere from $50,000 to $100,000 or even more. We managed to do it for roughly $5,000, and that's because we've done most of the work in-house. So that cost saving is actually passed on to our investors in that deal, and it at the end of the day doesn't impact the returns that they can expect.
What is the project?
It's actually a ground-up development project in Lenox Hill, Brooklyn. in the Garden Lefferts area. It's 345 Lenox Road. It's a 7-story, 22-unit luxury condo building. And we broke ground on the project. The foundation is pretty much finished. We should be finished with it soon, and then we're going to be ready to get into the second phase, where we'll be ordering steel and all the other concrete slabs that'll be required to start putting up the structure.
So this project will be a relatively quick turn because you'll build the project, sell the units, and be done.
So we're projecting 18 to 24 months right now. We're about 6 months in, actually, counting for the foundation. So hopefully we should be finished in the next 18 months or so. That's factoring in time to actually sell the condo units. We structured that deal for a sellout. There is a rental fallback provision, and that general area in Brooklyn has been very hot lately. So depending on what the market's actually like when the units are finished, we'll have to make an executive decision as to whether we go to rental fallbacks or sell the condos as planned.
Right. So give us a ballpark sense of the price of the condos.
The condos go anywhere from, I believe, $350,000 to about $850,000, and they're a combination of 1 to 3 bedrooms, I believe 1 to 2 bathrooms, balconies, no balconies. So they vary. Terrific.
What do you see as what does the rest of the financing look like? So 1.9 million is some portion, I presume, of the equity. What does the rest of the financing package look like?
So the entire project cost is about $8 million, just shy of $8 million. We have about $5.4 million in bank financing as a construction loan, and the other 2.4, it's a total $7.8 million. The other 2.4 is coming on the equity side. 1.92 million of that is through Sharestates, and about 480,000 of that is from the developer, the sponsor, which collectively adds up. So we're financing about 80% of the equity portion necessary for the project.
So you're acting in this role as a financier, that is Sharestates. This isn't your project. This is a developer's project. You're helping to put the financing together. What's the model for you to make some money on this?
Sure. So there's a couple of different ways of structuring these deals. On this particular project, we're actually taking a more active role, being that it's a Regulation A offering. We are involved in the day-to-day process of it. So as far as reconciling bank statements and everything else, and signing off on checks in excess of, I believe, $25,000. So we're involved to that extent. So we've actually put ourselves in there for management fees throughout the term of the project. So we haven't actually made anything on the project yet, and we won't until we hit certain milestones and deliver returns to our investors. So we kind of look at it as having some skin in the game rather than taking X amount off the top and walking away from the deal.
Great, great, great. Now I want to circle back to these Reg A issues because there is an exciting provision that few people have been talking about in the Jobs Act that's consistent with the spirit of the Jobs Act to enable more people to raise more money for startups and other projects and to democratize sources of capital. And that is the Reg A. Often this Title IV is referred to as the Regulation A+. Mm-hmm. How do you see that changing and creating opportunities for you at Sharestates?
Right. So we don't really know what the final rules are going to be yet. Hopefully they'll be out sometime soon. But as they stand now, what they basically have done is create a two-tiered system. So the existing Reg A will be where it is for the people that are looking to raise $5 million and under. And for those that are looking to raise over $5 million, they'll start kicking into the new Reg A Plus rules. Some of the ideas that are being thrown around with that are preempting state blue sky laws, which will be immensely helpful. So we want to.
That really is the key, right? Isn't that really the key to making this really work?
Exactly. That in tandem with the increased cap. Hopefully, I think they're looking at 50 million. We'll see where it actually ends up. Those two together are going to make a very big difference in what we're allowed to do publicly. There will be other.
The 50 million is in the Jobs Act. That's unlikely to be played with. But the Jobs Act doesn't require the SEC to exempt state or preempt state law, and the states don't want to be preempted, do they?
No. Many of the comments that I've seen thus far are from state regulators saying that it's their job and position to protect their citizens, and they don't want to be preempted for that reason.
It's absurd from an entrepreneur standpoint to be thinking about having to file these offerings in 50 states. What it really means is, unless you only intend to raise money from one state, which is realistically only in a handful of states, you can't do a Reg A offering if they don't preempt.
That's correct. Some states do offer an easier way to get through them. I know New York offers actually an exemption. It's called a policy statement 102 exemption. So once the Securities and Exchange Commission hands down their qualification, New York follows suit. The laws vary from state to state. Some states will require a full-on registration process when you're trying to sell to the general public. I know Florida, for example, requires a full-on registration. So it's kind of difficult to do right now, but hopefully the new Title IV rules will help aid.
Now let me circle back to another regulatory question. Of course, the Jobs Act created a completely new paradigm for raising money under Title II when they allowed for a general solicitation. Now that's different than any public offering. We oftentimes think of a public offering as being a public event, but it's very restricted. You can only offer the securities via prospectus, and just about any other communication is taboo. How does the Reg A offering work? Are you able to do a general solicitation, or are you only allowed to sell via the prospectus? And if so, are you able to do that online, or does this have to be an offline offering?
The Reg A offering, as it stands currently, can only be sold according to the terms of the Form 1A. That's basically the offering prospectus. That's what's qualified by the Securities and Exchange Commission. There are some guidelines in there for putting out a smaller snapshot of information. Usually you need to file, it's called a subscription literature, that needs to be filed with the Securities and Exchange Commission in addition to the Form 1A. So there's some difficulty in figuring out how to go about that. But really what we've done with the online platform is provide a snapshot insofar as possible, but then when you go through the checkout process and everything else, not only are the PDF documents available beforehand to view the Form 1A's operating agreements and subscription packages, but you'll actually be taken through that process through our e-signing portion of the transaction. So in other words, people have to read the documents before. Sure.
So it's interesting. So you have found a way to move this online so it feels very much like the crowdfunding process. You're looking at the same kinds of disclosure documents that might be required under Title III, most specifically. So it really isn't that different. It's interesting. You are a pioneer now in this area. You're certainly not the only ones doing this, but you are among a short list of people who are using Regulation A to get product out to ordinary investors. At this stage of the game, give us a sense of how it's going. Are ordinary investors ready for this?
Yeah, it's funny. Some people love the idea. Other people are a little more skeptical about it because they don't really understand it. The crowdfunding market in general is very unsaturated at this point. You can go to most people and ask them if they know what crowdfunding is, and a lot of them say no, and then you bring up a company like Kickstarter or Indiegogo, and some people are more familiar with that, so you kind of segue into, well, we're the real estate platform, real estate crowdfunding platform, similar to what they do. So in that sense, the people that are skeptical about it sometimes will find more ease once they get onto the website and they see what the process is actually like, and the fact that they're set up with a portfolio that lets them track their projects and really get the transparency that they're looking for. But the overwhelming majority of people that we speak to are very for the model, and reason being, it's another way to diversify for them.
Well, sure, and individual investors, ordinary investors, have been excluded from this marketplace really since 1933, and it's nice to have an opportunity to invest in something that traditionally would be available only to accredited investors. So it's a great thing. Tell us now how people can actually go and buy some shares? What's the minimum investment required? What does the process look like? Walk us quickly through how one would go about investing with you today.
Sure. So one thing to know is that every deal is going to stand on its own. Every project is a separate entity, has its own offering materials and its own terms. But the general process is a user would come onto the website, they'd create an account.
What's the website?
Sharestates.com. So once they've created their account, they'll be able to view the different investment opportunities. Some of them might be private, some of them might be public. It'll indicate so on the project. Once you actually go into the investment details page, you'll have a snapshot of market data, neighborhood data, financials, and general overview, as well as a frequently asked question page. We do get a lot of questions about the deals, so we try and post them for everybody to view. And once an investor is comfortable with that and they've had a chance to review all the information, they'll actually click the big green Invest Now button, and it'll take them through the checkout process where they'll enter the number of shares that they're looking to purchase, as well as check off the appropriate boxes for disclosures indicating that they've read the documents and that they understand the risks involved with the projects and everything else. Once they've done that, it'll take them through the e-signing portion, so they'll actually be able to sign the operating agreement and subscription package right online, and they'll have a copy of that in their portfolio, as well as a PDF version emailed to them. And then they can actually fund the project right online through a bank wire or through an ACH transaction or even a credit card. The minimum investments vary from project to project, so our public ones right now are starting at $100. The private ones go anywhere from $1,000 to $5,000, and as we get feedback from investors, we'll adjust that appropriately. But right now, those numbers seem to be working for us.
Great. And right now, this offering is available only to residents of New York because that's the only state in which you made the blue sky filings. Is that correct?
New York and DC, Washington, DC, as well as foreign investors from outside the country.
Okay, great. Thank you for adding that. Well, Alan, I really appreciate you taking the time to be with us here at Crowdfund Beat today. It's been a fascinating discussion, and I thank you for your time.
Thank you very much. I appreciate it.
All righty, let's do some good.